And with that, let me go ahead and invite our very esteemed speakers who will be coming together to share their valuable thoughts with all of us. First up, if I could please invite on stage Mr. Bharat Panchal, Chief Industry Relations and Regulatory Officer, India Discover Financial Services, to please come on stage, sir. May I also further invite Mr. Srinivas Jain, Executive Director and Head of Strategy, SBI Mutual Funds. May I further please invite Mr. Amit Jain, Partner, Price Waterhouse Co LLP. And ladies and gentlemen, to tie the insights together and to extract the inputs, may I please invite none other than Mr. Rajesh Desai, Co-founder, Managing Director and CEO, Lyra Network India. I know all of us enjoyed the lunch, enjoyed the conversations. Can we bring the energy back in the air and have a beautiful round of applause to welcome our very, very esteemed speakers right over here. Thank you so much for that. With that, Mr. Desai, over to you, sir.
Thank you so much, and thanks for this introduction. Post-lunch can always be a big problem, But thank you, panelists. Thank you for coming out here. Thank you, Bharat. Thank you, Srinivas. Thank you, Amit. We have a great, diverse panel here amongst us. And it always gives a great sense of pride when you have people from different sectors, different industries coming together with a common objective of having a great digital society for the future. So I guess that's a perfect platform for all of us. Also remember the fact that these gentlemen out here have demonstrated their capability of building this digital system over a period of years. So as we have the question and answer session as we go on, please keep your questions ready. I think at the end of 45 minutes, we will have probably open up for the questions for the audience as well. I mean, if time permits. Thank you so much. If I can set the context and set the tone, digital payments in India have seen a momentous growth. Everybody knows that. Phenomenal exponential growth over the past few years. Look at 2022. I think the world is watching. India did 9,000 crore digital transactions worth 2,050 lakh crore INR. Wow. UPI itself, I guess, did 46 billion digital transactions valued at 84 trillion INR. I said that the world is watching. Christoph, in his keynote speech in the morning, mentioned about India being far, far, far ahead of the world. And I think these numbers speak of that. I'm sure the gentleman would agree to that. Now, when we speak of these numbers, fintech players like us play a phenomenal role in that. Fintech players have to be a part of that. And when it comes to fintech, if you look at India's adoption rate, it's 87%. And when you look at the digital financial services which India has created, it's no mere peer-to-peer money transfer. It's gone far way ahead now. It's gone to that cutting-edge fintech. That's what we're looking at. And when you look at digital financial services, this is something which can be a great benefit for individuals, for the government, and for big organizations, small organizations, all put together. But yes, having said that, this is only possible when you have appropriate policies, when you have an appropriate regulated environment which can enable an inclusive and a productive, I guess I'm right, inclusive and productive digital financial services. Having said that, one of the policies obviously is KYC. KYC, without KYC, it's impossible, I guess, for any financial player to survive. It is a must for everybody, for every company to be KYC compliant. And I guess that's what we're going to talk about as we move on. Maybe before we dwell down into intense discussions, maybe opening thoughts from all the speakers. Bharat, you'd like to have some opening thoughts on this?
Okay. So as you rightly said, post-lunch session is always very difficult to handle the other side, that side as well, this side. Something similar than KYC, that we are physically there, but mentally not there. That is what the stage of KYC we have seen so far. But today, the way we are seeing the kind of value addition coming from something thought much, much earlier, that is what is paying prime, because to handle the kind of digital disruption what we have seen, especially a country like us, you can't benchmark with any other place in the world. Not only UPI alone, but in terms of volume, value, bank, the customer amount, what we are transacting. In which, how you can ensure the identity of a person who is, whether it is genuine or gullible. I think that is where the large challenge, at least I have seen in the last 1 decade, because we have kept on growing leaps and bounds, and it is visible. But probably conveniently, we have forgotten to give enough weightage on that sensitive area, which is now bouncing back to us. And I think that's the theme probably we are going to debate, but that's what is my opening remark.
Thank you. Srinivas?
Yeah, thank you. And firstly, thank you for inviting me to share my thoughts. Lovely session. And it's a very pertinent topic, right? If 5 years ago, if you'd asked me, is there a KYC challenge? I would have said yes. There's lots and lots of KYC challenge. We have this issue, that issue. But today, if somebody were to ask me, is there a KYC challenge? I would say not so much. Clearly, because we've come a long, long way. And Bharat kind of talked about the size and scale of the Indian digital economy and the scale in which it's growing. I think there have been some missteps too. I think we have gone one step ahead, taken 2 steps back, and we can talk about it a little bit. But really, the fact is the identity solution has been solved some years ago, right? So at least the primary KYC part of it is solved. The more mundane things like what kind of additional documentation, what kind of additional financial institutional requirements that are coming up because of regulatory environments, those things can get solved. Those things can get standardized. Those things can have better accesses. But clearly, the only country in the world to have this size of identity with Aadhaar and tied in with KYC, we have solved for it. Some regulators, like I come from security market regulation point of view, we've solved for this some years ago. We have a universal KYC. We have a single PAN-based KYC capability. We did video KYC even before RBI made it a reality last year. So a lot of things for us is like, why are people still talking about it? But I can understand there is a lot more nuanced part of it than what it seems at the outside. But clearly, when I look at this as a challenge outside India, they have a long way to go before they solve KYC compared to where we are today in India. But like everything else, and you talked about UPI, and I was just talking to the friends in NPCI, and they're saying, no, we are like 1/10 our potential. We've got 10 more X to go from where we are today. And I'm sure the same discussion can happen for KYC too. There's a whole lot more that can be done, and I'm sure we'll talk about it as we go along.
I'm sure there's a lot more we can do.
Thanks, Rajesh, and thanks for having me here. So the way I look at this topic, risk-based and interoperable KYC, and I've sort of looked back the historical trends of how KYC regulations have evolved. For all said and done, we have gone through a rule-based prescriptive KYC, and the focus has generally been on what the individual has with him or her. Like the documents could be like any identity address proof documents, and that's how all the processes have been designed. But I think with the digital revolution around us, we have to slightly go beyond it and see who the individual is. And that is where like the profile of the individual, where the AI ML technologies can understand better part of the individual's background, rather than just limiting ourselves to the focus of what the document he or she is providing. I think that's where the change has already started coming in, and we are going to see a lot more changes to come in the regulatory sphere. What we are going to be seeing in from RBI and other regulators as well. So that's one part from the risk base. So I think the need of the hour is we have to move from the rule base to the risk base and try and see what is required and have a lot more tiered base or a progressive approach to determining what the KYC processes should be followed. And when we look at interoperable, I think the need is also like what just Srinivas said, is that lot many good things have happened in one part of the regulators sort of domain. And there's a time for now to look at other regulators to see that if RBI can adopt some of the best practices, what's been there in SEBI or maybe in some other sort of regulatory atmosphere. And that is where we bring in a lot of these interoperability and good practices to be followed across the entire financial service ecosystem. So I think that's going to be my opening remark, Rajesh. Thank you.
Right, thank you so much. Companies definitely must comply to local regulations, and wherever applicable, wherever possible, definitely definitely global compliances as well. Thank you for your opening thoughts. So without any further ado, let me first pose the question to Amit. Do you think that regulations of fintech, which are not aligned with the regulations of banks probably, do they create inefficiencies, risks?
I would say, see again, going back, like when originally these regulations were drafted, and I'm speaking more for RBI KYC regulation in particular, the thought process have been that that any customer is likely to go to a banking outlet or a branch or a BC network where he is going to be in person present, and therefore he is comfortable giving the documents or following the processes. But time have changed where individuals are now not required to be in-person present before the service providers, and it could be any fintechs, whether it is payment product, lending products, investment products, capital market, any other products. And therefore, there is a need for following some of these differentiated approach in non-face-to-face environment. I think that distinction is something which was required and have started to come in the recent sort of changes what even RBI has introduced in the master directions, where they have started to acknowledge that it is not a must requirement that a person has to be in front of you to complete the onboarding process. There are many processes which even post onboarding the customer could be followed to monitor their transactional behavior and the patterns, which is going to be a lot more useful to understand if there are any risk of money laundering, terrorist financing, or any other sort of situations of like that manner. That is where I think some of the distinctions have already started to come in. So I don't want to call it as like the same approach should be followed. There might be a potential risk, but those risks have to be assessed in light of the target customers, the products which are being offered to the customers, and the delivery channels which are being used for offering that product. So a one-size-fit approach definitely is not something which will work, and therefore, like wherever some relaxation have to be given to fintechs in terms of their end use cases, whatever the use case that they are actually serving to the customers at large, those have to be factored in when designing any KYC approaches. And therefore, I see that on one spectrum, we will see where the cash is going to be usage, and therefore the high risk of money laundering. On the other side, if it is entire bank-funded settlements or bank-funded accounts are being used, where the risk is managed to a large extent, those have to be seen in a different context. So that's how I think the spectrum of KYC will have to be seen and evaluated.
Yeah, thanks for those insights, Amit. Srinivas, my next question to you. You know, India's finance minister during the union budget speech mentioned that India will simplify the KYC process. It'll be going in for a risk-based approach rather than a one-size-fits-all approach. You know, what do you think are the risks there, or will simplify the entire process? What is your take on that?
No, I think it's a fantastic move, right? Globally, there has been a thinking around risk-based approach. We've seen this example in some of the countries, financial institutions kind of use it. In India, it's, and of course, Amit kind of touched upon RBI's master circular also being updated. It is now kind of time for us to think through this as use case, user segment, channel of delivery, mode of payment or mode of transaction. And based on this, there is definitely an ability for us to rethink how the entire KYC process is done. One, of course, for convenience. You don't want to overdo KYC. Second, of course, you need to catch, always when you bring in the basic minimum, you also miss the outliers, right? So you don't want to miss the outliers. So you also want to make sure there is a thorough due diligence, thorough KYC in places which matters, right? To get that right, you need to have a much more structured and detailed KYC, an ongoing KYC requirement, right? So that's the part. The next part, I think, clearly is, I think we are all moving towards a global risk-based scores, which are kind of harmonized all over the world. There are already some models available, and even in European Union, they've been talking about it for a while. So you will see the standardization coming, and through FATF and other entities, it will become a reality in coming days. So it's a good thing that we start moving towards the direction. In fact, we should be leading this discussion because we have a unique client base in India, a unique delivery model in India. We should be leading this discussion, and I'm sure regulators are already talking, and in coming years, you will see more of this kind of happen.
Thank you. Talking more on that, the specific approach, risk-based approach, what issues do you see there? And when you talk of KYC, you have either a human judgment. When you look at KYC, you judge by human judgment, or you have modern technologies. But when you have this approach, do you think it will create a balanced integration between both of these?
No, I think one of the important talk was Srinivas mentioned about the risk-based approach, right? But looking from the current landscape, see what is happening today. KYC is no more 0 or 1 game. We are just going ahead with the old fashion that, okay, once you are in, then everything you can do. See, today India is exposed with different kind of risk altogether, and especially when we are blessed with such a beautiful neighbors, which are continuously trying to, pump in a good, ugly thing for country. We need to completely, revamp or kindly shift the parameter on what we are doing as we are assessing customer today. Now, coming to the complexity, I think, see, complexity is not existing at all. Let me be honest with you. The complexation with us is that we always see to the Western world, that whatever innovation happened there, that only work here. I think we are living in the wrong myth. Because the same thing when regulators started in 2008 about the second factor authentication, the whole of the world laughed at us, that India does not have teledensity, India does not have handset, India does not have infrastructure. How are they going to? Now the same world is standing in queue. How we can take this technology to their country? Right. So as far as complexity is concerned, there is absolutely no complexity, because Srinivas was mentioning that how the worldwide people are taking different model. Like we are always seeing SSN, the great innovation happen ever in the world. SSN has around 66 amendments so far, but still it is static. It is not dynamic as what Aadhaar is. So we have that wherewithal, we have that government support, we have 1.32 billion database, which is the largest in the world, which is available for KYC. Only thing is that there's a little blunt statement, but when it comes to fintech, they feel like, the left party is in UPA government. They enjoy authority without having any responsibility. No one can question them. So that is where the problem is. The second point is that we believe that in today's fintech revolution, regulator doesn't know. Regulator has very limited visibility till the market and credit risk and not the rest of the. It is completely wrong phenomena, because the same regulator envisages the ecosystem what you all are enjoying today. They came out with vision document in 2002. So we are trying to circumventing such control which the mandate has come from the regulator. We are passing that responsibility to fintech. Now fintech is fintech does know who the guy is, who is the person transacting that particular transaction, where from the guy is sending money. So somewhere the combined model between all stakeholders, because today the ecosystem is not like that, my CBS, my customer, my ATM, my branch. No, we are completely out of that. We are in interoperable world. So therefore the vision, process, policy and control has to be interoperable. I think that is what the biggest challenge. Technology, resource, infrastructure, absolutely no challenge. It's only the mindset.
Yeah, I resonate with your thoughts, absolutely. And, India was looking towards the world 10, 15 years back. But believe me, strongly believe me, the whole world is watching now. And everybody is looking at what India is doing. And I think we as fintech players should be extremely proud of that. I think we all as fintech players should be absolutely proud of that. I think all of us deserve a huge round of applause. So ladies and gentlemen, please, for all of us once again. Thank you so much.
And as far as complexity is concerned, UPI looks very simple, very fabulous, very, easy to run away. Do you think it is that easy at backend? It is much complex. It is such a complex thing, which I think,
I agree.
our blood and sweat has gone, so I know very well how complex it is. But when it comes to customer experience, we don't want to engage them for complexity, how to use it. We just ease and operate and just go away. I think that is equally possible in KYC era also. The moment you change your mindset, because see, when we launch UPI, do you think that everybody came with, platter and asked for UPI? No, we had to literally push them. You use UPI. This is something game changer. It's going to be a WhatsApp moment. We have to convince people, but now it's completely changed. So same thing is there in KYC.
Thank you so much, Bharat. Next question to you, Amit. We're talking of contactless payments, we're talking of borderless finance, we're talking of lot of things, whatnot. But when you talk of all these different innovative technologies, innovative services, practices coming out, you also start looking at different markets, right? Obviously, you're in business, you start looking at markets because it brings you more revenues, more profits, more customers. But when you look at more things, you start looking at KYC, which starts becoming more and more complicated. What's your take on that? Do you think it becomes more complicated? Is it easier that way, or how do you tackle that?
See, more than fintechs, I think let's step back and understand. So there are a lot of these nations which are part and members of FATF. Maybe just for the group to know, so FATF is an international government body which monitors money laundering, terrorist financing related frameworks and the standards to be adopted by each of the country. And India is also a member of that body. In fact, as we speak, India is going through a review by this body. So a lot of changes that you see coming in the last few weeks, months, are part of that review process so that like, India can and should demonstrate its seriousness and discipline towards the KYC and the anti-money laundering provisions. So the point I want to make is because a lot of these nations are party and members of this international framework, there is a lot of commonness and standardizations when it comes to KYC approaches. Maybe the how part. So what part is something which is already defined by the international body, and therefore the how part is left to each of the nations to determine what sort of comfort that they would get as part of the local economic situations, social status around the nation. And therefore, a lot of these fintechs, when they travel, like, and talking about India, like India has already seen a lot of these learnings, experiences when it comes to KYC, and the fellow panelists already spoke about a lot of innovations that we have seen here. Now, these learnings and experiences are something which can easily be taken to the different nations just by customizing some of the processes, the documentations, what's required as part of the specific countries. So I think it's not going to be difficult if Indian sort of startups want to go in any part of the other worlds. Would they find it difficult to sort of offer their onboarding journeys quite different than what they have been offering in India? I don't see that as a challenge because a lot of learnings from India can be taken to those markets. Another point I just want to add, and this is something which came to me as a good note of understanding, is that a lot of Indian startups helps Indians to invest in stock markets in other parts of the world, like US and Europe. What I'm told is like the other regulators have started to accept Indian documentation, whether it's passports or other sort of identity documents, as part of their onboarding journey procedures. Now that is something I think is a way forward where a lot of regulators and authorities should collaborate and try and see that how each country's documentation can be adopted so as to have a lot more seamless and a better way of actually helping each other in the onboarding processes. So I think, yeah, these are my comments.
Thank you so much. And fintech has really changed the way consumers, consume or utilize services. A lot of credit can be given to technology, but then if you don't have a robust compliance in place, it doesn't work out. My next question to you, Bharat. Do you think that interoperable KYC across fintech regulators would add a layer of complexity for fintech infra?
So I'll come to your question a little later, but before that, see, today in retail banking, if we see the three segment, which I particularly see that one is your KYC when you onboard a person. Now, entire banking is relying on SMS or register mobile number in your CBS. Have you ever cross-checked that what the level of KYC is done for the person who is purchasing the SIM? That's the biggest problem. The second problem is when it comes to merchant onboarding. Again, the business is shown something else, the thing are going something else, right? So that is the second. There is a third segment where, kind of bank accounts are being rented for fraudsters. The genuine KYC done, the person has gone to branch, account is open, but again the 0 and 1 game. Once he is in, he can do anything. Now, in that case, when interoperability comes, see today, my bank account, my UPI account, it is not within one regime of the regulator. I'm not doing transaction within the bank. I'm doing my, let's say I'm paying my SBI mutual fund. I'm using UPI. But that is going into different regulator. Same for insurance, same for the equity market. How are we, why we are creating that islands? Because, of course, the regulator has their own mandate, but when it comes to security, when it comes to a control environment, are more or less same. It is very easy to make it interoperable. As I said, technology is there. Only thing is the moment you connect to everything. See, today, we all rely on CIBIL score, right? We rely on that. Just we don't know how complex it is. It is bringing from 100 different, portfolio what I'm managing on my own. But same thing cannot be there for KYC. Yes, it can be. Again, see, there was very fantastic time for me when, as a chief of risk, when eKYC was introduced, the 80% of fraud of SIM swap in banking sector literally gone. It was vanished because there was no option, but you have to go and do your fingerprint biometrics. But today, we can't comment about the Supreme Court's verdict, which came in April 2016, but it is not a mandate. But at the same time, there is a different challenge where there were 10,000 silicon jelly fingerprint, which was fake fingerprint, got captured, and people were using for fake biometric. How are we coming out with that complexity? But why I'm bringing this example, in spite of having that kind of new innovative way of fraud, our system, our Aadhaar system is so robust, where they introduced in 1st of February, 1st of March, they introduced the liveness check. The moment you put your thumb, it will check whether this is a live thumb or not. Which country, which environment, which nation give this much of flexibility, this much of advanced technology? It is already there. It is just a mindset. The moment you, see, the moment I enter into the digital ecosystem, irrespective of which sector, I have only one identity. I'll be remain Bharat Panchal. I will remain Bharat Panchal forever. In whether I go anywhere. And the supporting infrastructure, supporting system, everything is there. Absolutely no complexity. And as I told you again also, that every technology is, complex. We haven't gone to Facebook or WhatsApp classes to learn how to use that. People are, more than, 90% of Indians are using it. So when it comes to KYC, people will learn it. We have to just start. Complexity and interoperability is synonymous today. There is absolutely no challenge I particularly foresee.
Okay, great. Thoughts taken. India is a very massive nation, and you have your population which has got different access to financial institutions because you come from different demographics probably. My question to you, Srinivas, probably would be, do you think interoperable KYC will drive compliance and financial inclusion, risk management, and profitability across sectors?
The short answer is yes, but the wind-about stuff is, this is a story which we've already seen. Unfortunately, did not work when it was introduced, which was CKYC. It's the implementation problem rather than conceptual issue. I've been part of the account aggregator platform since its rollout, and I've been part of the governing council of Sahamati. And we've always thought we could solve for that. Unfortunately, we were supposed to only give data and not get into the business side of it. Obviously, there are a couple of challenges. I think Bharat kind of beautifully touched it, right? So the first challenge continues to be each regulator has a different way to look at it. Now, is there a common denominator? Is there a variability that can be involved as part of the process? There's a lot of debate happening. And I'm actually very happy to hear that now some kind of an aggregation model is coming into place. NPCI is now looking towards building a kind of a gateway to have multi-regulatory KYC to be kind of managed. So I hope that works, right? Because we've not been able to solve in India, but globally people have already solved. There is something called mutually accepted jurisdictions. Like you might have heard about UCITS in Europe, where every country follows an accepted law. If you are a citizen of Switzerland, then you can transact in France without actually going through French KYC regulation because you have a mutually accepted regulator which actually takes care of it. In India also, we've, in fact, during the COVID days, many of the investors in our business actually started investing in US. In the initial days, that whole KYC process was very complicated. And to go back to what Bharat and even what Rajesh was saying, when fintechs in India started demonstrating this to SEC in US, and then they start saying, hey, this makes sense. We can accept what SEBI's KYC requirement is or India KYC requirement is even for us. In fact, today, I have seen some fintechs which actually can do KYC of India and real-time open an account in US to do a transaction and buy a stock in US. So we've solved for it. It's possible. Now, in India, because of some multiple hopes and various other issues, this has not been done. I'm so happy to hear Finance Minister talk about this in the budget this time. She said risk-based, and she also said universal KYC. These were fantastic words, and I'm hoping that 2023 itself, we can see some initial work towards it. But to answer your larger question, is this required? Is it going to be useful? I mean, who will say no? Obviously, this is going to be very useful. This will drive growth. This will drive innovation. This will grow simplicity. And to Bharat's point about fraud and how do you manage some of these things, I think we will find solutions. And Amit kind of started off by saying adding AI/ML layer is definitely the next thing that we need to do to build some of this management, because it can't be just one passive KYC done at one regulatory requirement that kind of overlays and everybody is hunky-dory. You have to continue to build internally and externally in the system an ability to track how this is being used. So I'm sure you'll have very good solutions, and at the end of the day, highly profitable, low transaction capabilities is what we will end up building.
So you still strongly believe that it's highly profitable?
I don't see a reason. See, we have already looked at the transaction costs, how they've come down over time. I don't see why KYC costs will not come down if interoperability is introduced, right? It is going to come down dramatically. I'll give you an example of our industry. And many people don't know this. Of course, if you're a mutual fund investor or stock market, you get to know this. We have a concept called KRA, KYC registered authorities. So they are not one, but multiple. They're all licensed. And they have a beautiful revenue model. What is the revenue model? Creation, no cost or minimal cost. But every time data is pulled, there is a cost that's paid, right? So there is a race to have, each KRA wants to have more clients in their database. As they have more clients in their database, the pull actually gets them the money. And it's kind of nicely federated, right? As the first guy's creation, guys pays a little less. Next time, guys pays a little more. So there is a lot of opportunity for the cost to come down and be efficient at the same time.
Okay. So India is known as a land of fintechs. Everybody in the world, when they talk of India, they used to talk of snakes. I remember 15 years back, India was a land of snakes. Nobody talks of snakes nowadays. They only talk of fintech startups, emerging fintechs, and glowing fintechs. So Srinivas, my next question runs back to you again. Do you think that these Indian fintech startups, do they struggle with KYC compliance, or are they okay with it?
No, I wouldn't say they're okay with it, by the way, because the regulatory framework, the way it is kind of today shaped, that there is a principal FI which actually does some of this stuff, and then the fintechs who are attached to them have their own set of responsibility. Of course, fintechs have evolved to become FIs on their own, and there is a. Having said that, I think the digital layer that we've been able to create, the public good infrastructure, which is starting from Aadhaar to everything else that we've created, has made Indian fintechs' life multiple times more easy than what they would have thought through, let's say, 5 years ago or 10 years ago. That's the first point. The second point is, I think, at the margin, we have seen a lot of technology providers who've come and helped solve for the smallest of smallest use case. Some years ago, video KYC was an issue. There are probably 10, 15 technology platforms who actually offer that as a service through an API call. So I think there is really, there are lots of innovation that's happening around the industry, which is helping fintechs try and solve for KYC challenge. Either there are fintech already doing one in that space, or there are lots of fintechs who are trying to solve for it. I don't see that as a large challenge. The challenge would be as they start getting inter-regulatory, as they start building innovative product ideas. These would require some reference point at a regulatory angle. So if it's a multi-regulatory, then how do you work with it? What then happens on a continuous KYC programs and things like that? That will evolve, and I'm assuming after what RBI has recently talked about and what government has talked about, you will see some of these things happen. In fact, one of the things that get discussed is in the inter-regulatory meetings is KYC, right? I think that's a great thing. Initially, we used to say India made a big mistake of having 4 financial regulators, right? But I think it's a great idea because there are, innovations that happen in smaller regulations like PFRDA or SEBI or IRDA, which then gets to a larger regulator like RBI, would then pick up and say, you know, this kind of makes sense. Let's try and experiment with that. So it's a good thing, and I think all this is going to help the fintech community.
So if life goes on for these fintech startups, do you think that from a compliance perspective, it'll keep on becoming more and more easier, or it becomes more and more tougher as they move on?
No, I think the regulator will never make anybody's life easier for sure. So don't don't be under that impression that things will just be hunky-dory, right? Because it's the duty of the regulator to always catch up and say, you know, you got to build more tighter environment, reduce fraud, build better mechanism of risk management. But operationally, I think it's going to become more and more easier, right? Just imagine 10 years ago, if somebody had come to you as I'm not sure many fintechs were around, but they were to come and say, you have to do risk assessment of all your customer base over this rate to this rate. And without any digital data, digital footprint, any of this thing, it would have been impossible. Right? Today, not only do we have digital data, we have this something called AI/ML, which now is being used quite often, and everybody is trying to do those risk-based assessment and give those data. And there's quite a lot that's happening. By the way, regulators themselves are doing quite a lot, because all of this data is anyway going back to the regulator. They have their own data bonds running, and they themselves are doing a lot of these risk-based analysis. So I think it's not going to be like once done over kind of a thing, but operationally it's going to become easier and easier. And a good thing for the fintechs it doesn't need to be now forced down, right? Things will happen automatically because it's kind of natural. Bharat talked about how to use Facebook versus using a KYC. From a user experience point of view, it's going to be very easy. I don't think it's going to be very difficult. Probably how financial institutions or a fintech is going to use that data and how they will do from ongoing regulatory compliances, that I think will depend on each fintech from one to another. Yeah.
Okay, so if you look at the last few months, I'm sure everybody's heard of this. You would have seen that many fintech companies all across India have been receiving notices from the regulator for not complying or not fully complying to KYC processes. So it's been there for a few months, for the last few months, if you look at media and if you look at news. But my question to you would be, why do you think this is happening?
I already answered to you. They feel like they are a left party in the UPA government. If they continue to do so, definitely they will have much more challenges. See, regulator is there as a overarching, body to make sure that things follow the proper principle. As far as the business is concerned, within the periphery of the regulation you do, no issue. And RBI, in that way, they are far more ahead compared to the other regulators. They launch regulatory sandbox much ahead, where you can come and do your product testing, looking at the complete regulatory requirement. But the moment, things on the name of technology innovation or kind of, fintech innovation, something fancy, name giving, and you say, no, I'm immune and I'm not supposed to follow this. That is a very rigid approach taken by fintech. See, I don't blame entirely the fintech because some of the area were left for interpretation. So today, some of the fintech become much bigger than bank. I don't want to name them. But who is going to control them? And especially the country like India, where we see the plethora of product, plethora of bank, the kind of different challenges. And if some set of the, people say, कि कागज नहीं दिखाएंगे, then it is a problem. So if they want to do business, and not only India, you go to Banana Republic, there are certain laws, there are certain rules. You have to follow it. However, probably the mindset of our typical Indian mindset that Bahti Ganga hai, haath dho lete hain. That has made much bigger problem for the fintech themselves rather than to the regulator. Regulator understood, they won, and my personal experience is very, very much clear about the regulation from the government side that they warn you, they tell you that you are doing wrong. And still you're trying to, go opposite way to the regulator. Naturally, this is bound to happen. So I think it is good indication by a regulator, and Srinivas also mentioned that there is an inter-regulatory body which frequently discussing about this thing. One day will come, and that is not going to be too far, that single KYC, single body which will give entire ecosystem for that. And that is for every player, not only bank, not only the DSA, not only the fintech or those who are processing our card, but everywhere there is a single identity. There will be second thing would be, probably it will come from the fintech, that adaptive learning is very, very important. Because, once I'm in and what kind of a transaction I'm doing, it is something known to me alone, that is not going to happen. And that is where the adaptive learning is required, that the moment my pattern is changed, those innovation are already there. Some of the startups are already doing that. So, by virtue of that, even if you want to break the signal, you will be warned that you are breaking your signal. Now, choice is yours, whether you want to be remain in the business or not. You have to pay a price for that. That's simple.
Thank you. Amit, you represent PwC, right? And you've been into the space for a long time, handling fintech regulations and all. We would love to hear from you. What's your take on this?
Yep, I would sort of agree with Bharat. I think what one needs to understand is no matter what technology innovations that we keep talking about, there are two primary data points which everyone is touching upon. One is customer data, which is customer identity, customer transaction data, and the second is the funds of the customers. And this is something which is very close to the regulators, that because you are dealing with customer data and customer funds, you need to respect the ecosystem where you are playing in. And you can't come and start manipulating or start doing something which may go against some of the principles or visions which have been articulated by the regulators. I think this is where regulators keep intervening wherever they believe that any innovations or any sort of products which are actually bypassing or sort of misinterpreting the intent and the spirit of the regulations. They intervene, they come back hard at times, they issue show cause notices, they issue penalties to try and make sure that there shouldn't be such practices which may lead to follow on by other fintech innovators who want to start following the same path. So that's on one side. The other side, what needs to be also sort of seen by a lot of these fintechs is that because they work in such a manner, either they work on their own or they work with bank, a lot of the fintech partnership that coexist with banks, they can't step into the shoes of the banks. They need to respect the banks' sort of guardrails where the banks have to operate. And that is where a lot of these frictions do come in, where fintechs start taking charge of the operational and the onboarding processes, and they don't understand the need of why KYC is required. And a lot of times when I've gone through some of these inspections, the regulators want to understand is the organization understanding the importance of KYC? Do they have fit processes and sort of structures to understand what is expected out of by the regulators? And that is where a lot of gaps they notice when there are not adequate compliance policy document, KYC policies in place. They don't have enough transaction monitoring systems in place, which is where the regulators start getting slightly sort of at the back seat to understand are the fintechs actually operating the way they are expected to do. So I think these interventions will keep coming in to kind of try and make sure that some systemic issues should not create at a later point in time, and that is where these actions are being taken by the regulators.
Great, thank you so much. Great to see such energy from all of the guys. Now, I leave it to the audience now. I want to see some energy from the audience. I open up it for the question and answer session, and please pass the mic.
Thank you for this great session. I'm Amit from NPCI. I have two questions for the panel. The first question is, there are a lot of TSP who are showing interest to provide the KYC services, or rather the eKYC and eKYC Setu services for the different party like the insurance sector or bank sector. So what's the comfort level you guys are having as a TSP to get the services from, let's say, from NPCI? That's the first question. Second question, you talk about the risk management, fraud, AML, all those things. So what are the couple of key features what you want which can be incorporated into eKYC services?
To answer the first question about TSPs being allowed to use eKYC, which we already do that. I mean, in security markets, we have multiple TSPs we use their services. And there are quite a few handful of them that we use for video-based, Aadhaar-based, and a couple of other stuff. I think the second part, I think it's good, Bharat, if you can answer this second question. I don't know whether RBI actually allows them to do it. So RBI requires the bank itself to do the KYC process. So that's the challenge. But with other regulated entities, I don't think it's a challenge at all.
So to answer your second question about the fraud and risk part, so basically, you know, the identity of a person, that's what the KYC. And when the guy come within the system, when it goes to like a fintech, where let's say for example, I think you are from NPCI. Okay, in NPCI, we don't see the person's name, who the card holder. Now, the classical challenge, since I manage risk at NPCI, so I have some little understanding. So we got SDN list. Now, SDN list, whether it is Dawood Ibrahim or, you know, Chota Rajan, we don't know, right? But when there is some meaningful data around that particular profile, where you need to track some kind of person, those, let's say for Nirav Modi, you know, how we can check those persons' transaction within the given system. That's where this kind of data may useful over a period of time. It may not be useful from day one, but in KYC there are, you know, you can give a pseudo number, right? Where you can give some reference number like what today in tokenization, what alt ID is something similar to that. Same thing can be introduced for this kind of network where fintech are working on transaction monitoring for fraud and risk purpose without knowing the person's name. They can come out with some mechanism by which you can build a profile, and that is what the whole data modeling is all about, right? And that's where, you know, the moment a second transaction or third transaction become little suspicious, then you can use that profile, raise a bar. You may ask for enhanced KYC for that particular transaction, or if you are very, very sure that this is genuinely a fraudulent transaction, you can stop then and then itself, rather even giving to the issuing bank. So that's how you can use the KYC parameter in future.
Yeah, but in the transactional data, you will not be having those PII information, which is like the customer name.
It is allowed. PII is allowed for fraud monitoring.
Yeah, but in the fraud, like that's what my question like. So, what are the key features you are looking for to
exactly.
apart
So
from the pseudo information?
That is what the new mechanism has to have, that parameter which can give a feed, which you can map it back as and when there's a need. Currently, it is not possible. In the revised framework or the fintech innovation, what we are talking right now, that can give that kind of leverage for you to make use of that data in your product.
Some parameter through which you can trace it back. Okay, thank you.
Any more questions? We're almost at the end of it. At the back? Okay, great. Thank you so much. I think it is very clear that there's an apparent need of a scalable KYC. After all, KYC is is knowing your company as much as knowing your customer, So thank you so much, panelists, and thank you, audience, for being wonderful out there. Thank you so much.